Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Renewed warnings. President Trump threatens the U.S. may hit Iran with military strikes within days if a deal is not reached. Asian stocks fall as mounting inflation concerns extend a global bond sell-off, with 30-year treasuries steadying after yields hit their highest since 2007. And Samsung's largest union says it will go on strike tomorrow after talks with the world's largest memory chip maker break down. Well, good morning, everybody. It's just gone 8 a.m. across the Emirates, 5 a.m. over here in the UK. I'm Joanna Bersecci in London this week. Well, it is the fourth day in the row that we're seeing Asian equities falter, and of course, keeping a close eye not only on geopolitical developments with President Trump's renewed threats on Iran, but also rising bond yields. Luckily, we have Abir Abu Omar in the Dubai studio to break it all down for us. Abir, walk us through the markets this morning.
Good morning, Joanna. Yeah, look, on the equities front, things are down this morning. You mentioned a 3-day decline in Asian stocks. That carries on to the fourth day. Asian equities now 0.9% down. U.S. futures are carrying that trend as well, looking like the open at the S&P is going to be negative for a fourth straight day. And that stems from multiple things that we've been talking about over the past couple of weeks. One is the inflation concerns that are also driving bond yields higher. But two is the concerns stemming out of the Middle East. Now, stemming out of the Middle East is the word we mention when we talk about Brent prices, about it. $110 a barrel, down just slightly this morning. And this is perhaps due to a couple of reasons. One is some comments we saw from Vice President J.D. Vance saying that despite the comments we heard from President Trump earlier about possibly restarting escalations, he said that Iran wants to make a deal, so some positive signs there. But also, Bloomberg understands from sources that NATO may get involved in the Strait of Hormuz to help ships pass through. Now, that is not guaranteed, but that is something that we have reported. Now, the big story, Jumana, over the past few days has been global bonds, and this is reflective in the 30-year yields. This was a fascinating size and scope yesterday. The 30-year yields in the United States were at the highest since 2007, the eve before the financial crash, touching at 5.2% this morning, pairing some of the gains that we saw. But speaking of the yields, the chart that we're looking at today, if we flip the board, is on global bonds. And look, it's not just the U.S., right? Look at those yields. We're seeing the yields in Japan, Germany, and the U.K. The U.K. is close to touching 6% on the longer term yields. And our colleagues point out that, yes, this is inflationary risks coming out of the Middle East, but it's also loose fiscal policy that we could see in countries like the UK, Japan, Germany, and certainly the US, and also the lack of monetary tightening. So, look, Kevin Warsh has his job cut out for him when he comes to the Fed chair position. Yeah, most definitely, Abir. And one other thing we're watching out for today, also a big one, Nvidia earnings. So we'll talk about that later in the show too. Abir Abu Omar in Dubai. Now, President Trump is threatening to resume strikes on Iran in the coming days as part of a push for a deal to end the war. The latest threat came after Trump said he had called off a planned attack after an appeal by Gulf allies. This comes as NATO is discussing the possibility of helping ships pass through the blocked Strait of Hormuz if the waterway isn't reopened by early July.
I had made the decision. So they called up, they had heard I made the decision. They said, sir, could you give us a couple of more days because we think they're being reasonable.
How many days for Iran to come to?
Well, I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week, a limited period of time.
Join me now from Dubai, Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Stuart, quite simply, how should we read President Trump's latest comments?
So, look, it's fair to say that he makes these sort of threats pretty frequently, and I think we've lost count of how many times that you've had these escalatory sort of comments from the president. On the other hand, I think it would be unwise to discount it entirely, which is largely what the market seems to be doing today. A reminder that there's a lot of firepower still in the region, that there's a great deal of pressure building to get some sort of resolution. There doesn't seem to be much headway on the diplomatic path, despite some positive comments from the Vice President. And so all of those things combined, again, just be very cautious in discounting this notion that you may get escalation again.
Yeah, and Stuart, one thing that you and I have been discussing the last couple of weeks or so is, from the U.S. perspective, it isn't just the possibility of, kinetic military action, but also a lot of economic pressures being applied on Iran. I thought it was interesting yesterday that we heard from the U.S. Treasury Secretary Scott Bessent at the G7 finance minister meeting, and there he specifically talked about Iran's sprawling shadow banking network and called on other countries to help crack down on this, on specifically the network that Iran has. How significant could that be, do you think?
I mean, two things. Number one, he's absolutely right that Iran has got incredibly skilled, not only at having a shadow tanker fleet, which gets the oil and the products around, but also, as you say, a shadow banking network that is able to move money around the world. And, they've had a couple of decades to perfect that system. And it is also true to say they operate in many jurisdictions which, probably should be doing more to crack down on it. However, it is a very, very complex network. It's very hard to identify. Names and individuals change rapidly. It's not going to be an easy task. But, again, he's making a very reasonable point that, as well as military pressure, there has to be economic pressure if they're going to get results.
Yeah. And of course, the Strait, still a focus, one of the main stumbling points when it comes to progress on negotiations. NATO now saying that they will help introduce a plan to help, allow vessels to transit through July. What do we know about what the NATO have in mind?
So it still seems to be at the discussion phase, and they will need unanimity to get it through. And I would caution too much optimism around a plan like that, which is not to discount it, but you look at history, we've been here before with the tanker wars in the 1980s, where you had US military escorts for tankers coming down from Kuwait. Just look at the numbers, in those examples, you had to have a multiple of warships relative to the tankers to get it done. You've got something like 1,500 or so ships stuck inside the Persian Gulf. The amount of firepower that would be needed to make it happen is extraordinary. It would be very, very slow. On top of that, the military landscape has changed significantly with the advent of asymmetrical warfare. That is something they didn't really have to contend with in the 1980s. So, again, not to discount it, but it's going to be a very, very difficult operation if they can get that unanimity and if they can get it going ahead.
Yeah, and of course, NATO has been criticized by President Trump for not doing enough. So we'll see whether they follow through on this. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Thank you. Well, mounting inflation concerns have driven global bond yields higher, prompting investors to reassess valuations after a record-breaking rally in stocks. The Bloomberg Dollar Spot Index is at its highest level in 6 weeks, while Brent crude near $111 a barrel, with no signs of easing in the Iran conflict. Joining us now is Mahjabeen Zaman, head of FX research at ANZ. Mahjabeen, really good to have you with us. Abir was just walking us through the markets, and a lot of focus these days on rising bond yields. How much of an impact is that having on the FX side of things?
Yeah, look, of course, we have seen the dollar strengthen on the back of those higher yields, especially with Fed hike expectations now moving higher, given the CPI, PPI data we saw last week. But, we are a little bit cautious with the dollar rally. Sure, in the short term, you could see it. But, at the end of the day, from those rising Fed hiking expectations, we do still think that it's probably quite difficult for the Fed to out-hawk other G10 central banks. And as a result, we think that the strength will be constrained, and longer term, we still see the dollar weaker.
But at the same time, what we've seen in the last couple of days is equities have started to react, perhaps to rising bond yields, to concerns about the geopolitical situation, maybe even the fact that the run-up has been so robust as of late. We're due for a bit of a correction and a pullback. How is that likely to impact the USD? Will we see a support come through for the dollar in light of this risk-off sentiment, or will it continue to come under selling pressure in light of the broader questioning of the dollar trade?
Look, I think in the near term, it all depends on the U.S. data. Now, in the U.S., it really does feel like we are entering an environment where good news feels like is going to be bad news. And what that really means is that, in a normal backdrop, when you get stronger growth data, that tends to be good news, and you see stocks and yields move together. But given that these inflationary concerns are now picking up, stronger growth data will become bad news because that can points to tighter policy, which means, of course, not if the U.S. is holding up okay, it doesn't get in the way of Fed hiking, and that's what the market is pricing in. So, of course, our expectations of Fed easing, lending that support to downside moves in the dollar has diminished for the time being. But, again, we are a headline-driven market. Should we see any positive news out of, the Strait of Hormuz reopening, surely we'll see the dollar come off again.
Yeah. Which would you say out of the currency pairs that you monitor at least have the most sensitivity to energy shocks and, the continual rise in oil prices that we're seeing emanating from the Middle East region?
Yeah, look, I think as we speak, it's probably the Japanese yen and the sterling, which is really front and center of moves this week on the downside. Again, both are energy importers, so largely exposed to higher oil prices. But at the same time, both of them have different challenges as well. Of course, in the UK, we've got the political risks coming up again. In Japan, we've got a little bit of that fiscal uncertainty coming in because we saw recently that the PM suggested that there might be more another budget announced and more funding out of the debt side to pay for that cost of living support that she might come through with. Again, that's not helping the yen, and is obviously lending support to higher Japanese long-end yields as well.
Yeah. The other currency pair I want to ask you about is sterling. Obviously, politics front and center there. And one of the things that we observed over the course of the last few weeks is even though gilt yields were rising, the currency was largely immune up until a couple of days ago. How much political premium should be factored into the pound here?
Look, I think with the UK, this, political headlines, unfortunately, is not new. Now, we've been seeing it for the last couple of years on and off. And I think that political risk premium is already embedded in the sterling. It has been for quite some time. Now, obviously, to add to that, the fiscal uncertainty, if there's another change in the future in the government, then, of course, that will add on more downside. But even if we take the political instability and the fiscal worries away, the economy is not, again, looking as amazing. I mean, this week we have seen labor market data coming out, unemployment rate moving higher, again, wages coming off. So, we think actually there's more room for the BOE to remain on hold for now and possibly look at easing towards the end of the year after all this noise is through.
Yeah, when people talk about the pound, they tend to think of cable, pound versus USD. But I'm curious to hear your thoughts on Euro sterling, mostly because Euro obviously facing a lot of headwinds because of the higher oil prices and the potential growth shock. UK, on the other hand, you've got political premiums. So which one of those wins out?
Yeah, look, I think Euro sterling is usually the proxy to play UK political risk. And I think, with, Europe, of course, also being an energy importer, but I think they're a little bit more positive impulses relative to the sterling. We do know that last year we saw a huge fiscal program rolled out in the European zone. And I think over at the margin that should play out. I think net, I think, Europe is still in a little bit of a better state. Also, they have lower rates. So if they are looking to hike, they have more scope to do so. Whereas the sterling, we're still at pretty high levels on the rate side.
Mahjabeen, a pleasure to chat to you. Thank you so much. Mahjabeen Zaman, Head of FX Research at ANZ. The European Union has finalized the text of its U.S. trade deal after months of negotiations. The move now clears a major hurdle to ratifying the pact before President Donald Trump's threatened deadline. The deal would see the EU erase levies on U.S. industrial goods in exchange for a 15% tariff ceiling on the bloc's exports. The European Parliament and EU countries will now vote to ratify the finished text. Still ahead, as emerging market assets fall as the war drags on, we'll talk to Alan Siow, a co-head of emerging market corporate debt at 91. But up next, the Russian president arrives in China for talks to boost ties and strike a gas deal. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in London. Russian President Vladimir Putin has arrived in Beijing to meet with Chinese leader Xi Jinping to strengthen their alliance. They are expected to hold talks on securing a long-stalled deal for the Power of Siberia 2 gas pipeline. For more, we are joined by Rebecca Chun-Wilkins, our Asia government and politics correspondent. I guess we're getting used to those scenes of President Xi greeting leaders from around the world. Second big summit in the space of a week. But of course, that pipeline is of great focus. How important is it to both of those nations?
Yeah, absolutely. It does feel a bit like deja vu. Here we are again. I mean, the pipeline itself is hugely important to Russia, economically, strategically, politically. Before the Ukraine war, Russia was exporting most of that gas into Europe. That has all dried up, of course. So this is a crucial part of redirecting those exports eastwards into China. Now, of course, that would deepen Russia's dependency on China, not just when it comes to sort of commodities, but also that broader trade reliance that has really relied on China to support the economy through those trade links, through exports since the outbreak, since Russia's invasion of Ukraine and all of those Western sanctions that have been imposed on Russia. China, to some extent, it is an important topic. The war in Iran has, of course, only heightened China's awareness and the need to shore up those stable supplies of oil and gas. However, Beijing has also been very, very hesitant to become over-reliant on any one supplier. That diversity element and diversification is absolutely critical to the Chinese, and hence this anxiety perhaps of overloading or placing too much importance on another choke point that could potentially hold China or other nations ransom. So I think there is some of that sort of reluctance that we're seeing on the Beijing side, certainly.
Yeah, and it was interesting that in opening remarks before the talks, Putin told Xi that Russian-Chinese relations are at an unprecedented high level and a model of partnership. That is very interesting timing, particularly because, of course, President Trump was there last week. How should we read this from a geopolitical perspective, Rebecca, and the strengthening of the respective ties between the two nations?
It's really fascinating. Look, I think the timing of this was incidental. That Russia trip was planned before we had Trump postponing his trip. But because of that close timing, it's inevitable that we start to read these very close comparisons. So far, the treatment of these two look very, very similar. We both had that military honor guard, the flag-bearing, waving children greeting Putin and Trump into the Great Hall of the People. So lots of similarities so far. But as you say, a lot of warm words spoken by Putin so far. And it does underscore the very personal nature of the relationship. This is Putin's 25th visit to China, according to the Beijing side. And the two leaders have this long-standing relationship, although they don't share a common language. They've even celebrated birthdays together. So I think on the docket is going to be a much broader topic of conversations, well beyond just that pipeline. We're going to be talking about geopolitics, Ukraine, the Middle East, as well as trade and economic cooperation. And there's plenty of forums for that. It does look like they are having both these broader discussions with delegations as well as these smaller meetings between Xi and Putin. There are a couple of different things in terms of optics that we're looking for, really to the level of what entrances and what gates Putin's sedan goes through when it comes to navigating Beijing. So I think in terms of that scrutiny for sort of political analysts and nerds like me out there, there's a lot of fodder to be really closely watching to see how Beijing navigates these two different trips.
Yeah, well, the height of geopolitics and the power dynamics is celebrating birthdays together, as you mentioned. Rebecca Chun-Wilkins, thank you so much. Well, coming up, investors watch for earnings from the world's most valuable company and any plans to ramp up production. We'll talk Nvidia numbers next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in London. Nvidia will give a much-anticipated update on the state of the AI economy when it reports first-quarter results later today. As Bloomberg tech co-anchor Ed Ludlow reports, the Chinese market continues to cloud the outlook for the world's most valuable company.
There's massive beat and raise expectations for Nvidia. The market really believes the momentum continues. Top line growth 80%, bottom line growth 84%. But China is still the overhang for Jensen Huang and his company. Post the trip to China with the president, there wasn't really a net conclusion. Jensen Huang projected confidence when I was able to ask him about it just before earnings. But the reality is it's still up to China.
The Chinese government has to decide how much of their local market do they want to protect, and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open.
The environment is really clear. Demand is outpacing supply, and that manifests itself still in memory chips. Jensen Huang talking about the idea that the supply chain is doubling, maybe even quadrupling per annum. But it's over the next decade that we're still going to see that mismatch. And so that is the question that markets will pose. Where is the continued growth momentum coming from in the face of supply constraints? And also, what is really going on with China? Because right now, the base case assumption is that China is zero revenues. It's definitely a market that Jensen Huang and Nvidia want to be in. Ed Ludlow for Bloomberg News in San Francisco.
That was on Nvidia. Well, Bloomberg has learned Goldman Sachs and Morgan Stanley have secured the top lead positions for SpaceX's upcoming initial public offering. Billionaire Elon Musk's rocket, satellite, and artificial intelligence firm is targeting a $2 trillion valuation. The listing is expected to raise up to $75 billion, making it potentially the largest IPO in history. And a quick look at equity boards. We are leaning towards red today, down moderately. S&P down about 0.1%, the Dow down 0.2%. Take a look at European markets. Once again, trading in negative territory. All eyes later today will be on those set of Nvidia earnings. Will be key for where the market is directed from here. Coming up, conflict-driven inflation fears sends global yields surging to levels last seen in 2007. We'll discuss that next with Alan Siow, co-head of emerging market corporate debt at 91. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Renewed warnings. President Trump threatens the U.S. may hit Iran with military strikes within days if a deal is not reached. Asian stocks fall as mounting inflation concerns extend a global bond sell-off, with 30-year treasuries steadying after yields hit their highest since 2007. And Samsung's largest union says it will go on strike tomorrow after talks with the world's largest memory chip maker break down. We are live in Seoul with the latest. It has just gone 8:30 a.m. across the Emirates, 5:30 a.m. over here in the UK. I'm Johanna Bersachi in London this week. Let's check in on how global markets are faring, leaning towards red, a bit of a risk-off sentiment. Abir Abu Omar is in Dubai for us. Abir, run us through it.
Good morning, Jumana. So look, U.S. futures are trending a little bit lower today now. It's the same story you've been talking about for about a week, which is inflationary concerns coming out of the Middle East war, but also the AI story returns front and center. We mentioned earlier on the show, Nvidia earnings are expected later today. And look, the rest of the Max 7 cohort that have reported, what we know is that AI investments are going to be close to $800 billion this year. And so we await Nvidia and what its earnings essentially say about AI investments. Asian equities down about 1%, pairing some of those losses from earlier, led by the Kospi in South Korea. You mentioned the story about Samsung, which is one of its biggest constituents, and what the Samsung employees, the union, said that they're going on strike. Now, officials in South Korea had said that that would cost the country millions of dollars per day. So we await to see what happens happens in that case. But Asian equities trending lower, same concerns about inflation and higher oil prices out of the Middle East war. Oil edging lower, 0.6% lower this morning, Jumana, as we await to see what happens. A truce, no truce. President Trump said attacks could be possible Friday, Saturday, Sunday, or sometime early next week. So that is something that we're keeping an eye on. Big story for the day, big story over the past few days. Treasuries in the United States, 30-year yields, the highest since 2007, the eve of the financial crisis, Jumana. We're seeing similar moves in Japan, the UK, Germany, and those are moves that are, again, because of loose fiscal policy, rather, and the concerns that are coming out of inflation risks in the Middle East, and also what are central bank going to do about this? The hawkish tilt that we've seen out of the Fed is something we're keeping a very close eye on, and what upcoming Fed Chair Kevin Warsh is set to do, but certainly what is also happening around Europe.
Yeah, his swearing-in ceremony on Friday, something to watch out for. Abir Abu Amar in Dubai, thank you so much. Well, talks between South Korea's Samsung Electronics and its largest labor union have broken down, raising the prospect of a workers' strike disrupting operations at the world's largest memory chip maker. A general work stoppage is now planned for Thursday. Let's get to Seoul and senior tech reporter Yulim Lee. I mean, the fact that this is having an impact on broader Asian equity markets tells you a lot about the significance of Samsung. Do we know if this strike is actually going to go ahead, and what exactly are the sticking points between the two sides here?
Sure. The union just a few hours ago came out and said they are going to go ahead with a planned strike tomorrow. This was after a series of negotiations that had been going on with the management and mediated by the government. And so they came out and said, there was a proposal, but the management basically did not accept that. So they have no choice but to go on a strike. In the meantime, Samsung came out and said they have made a lot of compromises. The sticking point was really around a few things, but the most important was over the bonus. The union has been demanding 15% of operating profit allocated as a pool of bonuses for the employees. This year, they wanted the management to remove the cap on bonus, which is currently 50% of their annual income, and also they wanted all these things to be formalized, institutionalized, so they don't have to negotiate every year. So Samsung said they have accepted really the majority of what they were asking for, but they were demanding certain things that are too excessive. So they couldn't really accept all these things, given the the company's the policies. So that's where we are right now.
Okay.
But I think they still have they are still open to negotiations. I think there are still some rooms for breakthrough.
Yulim, let's see. Okay, thank you so much, Yulim Lee in Seoul. Now, emerging market currencies and stocks waver as mounting inflation concerns fueled a rise in global bond yields, prompting investors to reassess valuations after a record-breaking rally. Joining us now to discuss is Alan Siow, co-head of emerging market corporate debt at 91. As a fixed income investor, are you seeing the rise in global bond yields as a good entry point, as a potential buying opportunity?
Good morning, Jumana. Great to be with you again. I think as we revisit some of the volatility we saw in late February, early March, I think it's useful just to remember what happened over that period, which is the remarkable resilience of markets after acknowledging and wading through this wall of worry. I think we're in a similar position now. I think the clear risk that markets are trying to price is this inflationary impulse and what that means for markets. We remain constructive. I think it's useful to see Treasury stabilizing here at just over 5% at the 30-year mark. We seem to have priced most, I guess, of the immediate shock. It's hard to look beyond the current uncertainty, but I think there's room for some cautious optimism.
Yeah. At the same time, there's a bit of a wedge between how local bond debt has performed, local currency versus hard currency, the bonds that are denominated in USD. Would you say that because of that, EM local currency debt presents a better opportunity, or do you stay clear out of, various concerns, be they growth or inflation at this point?
I think one of the advantages of local currency EM fixed income at the moment is the diversification proposition for many of our global clients that are not funded directly out of dollars, so where their home currency is another currency. I think what is reflected in the markets now is that dollar weakness, the fact that dollar is not acting always universally as a safe haven, means that clients need to look maybe beyond, the traditional G3 construct. And that's really where the value of local currency is really shone through. Now, obviously, we're still arguably early days here, but it is a useful alternative.
What are the criteria you're looking for when you're picking the winners in this environment?
So look, on the EM corporate side, and we are fundamental value-based investors. So the first thing we do is we revisit and re-underwrite all the credit cases for the investments we undertake. In the midst of all of this noise, there's a lot of disruption to supply chains and to business cases, but there are winners as well as losers. And when you're lucky enough to be able to choose from such a big patch as emerging markets, it's easier perhaps to find them. And although there's been a lot of focus on the disruption to oil and the downstream products of oil, there are definitely players in the market that are benefiting because they have access to advantaged supply, or they have production facilities that are not affected, or they can address markets that, again, do not rely on some of the affected supply chains that we're seeing right now.
Alan, there's been a lot of focus on the sort of shocks emanating from the Middle East region, US as well. But I also want to ask you about China, because there has been an interesting development in China in that it is no longer in a state of deflation. What we are seeing is inflation for the first time in years is actually starting to pick up. And I wonder what that does to the EM complex insofar as China's gone from a net exporter of deflation to potentially a net exporter of inflation.
Look, that is definitely a fundamental change. We'd like to stress it's still early days. We've come from a regime where deflation, particularly within services and the consumption sector, has been very prevalent. China's been actively taking steps to address that through the anti-involution and more sort of, I guess, policies that spread throughout the economy to prevent excessive, if you like, corporate competition. Again, we're at the foothills, but if China enters a more orthodox sort of economic environment, arguably it makes the world slightly more synchronized. Now, while that may mean that certainly for the rates and inflation outlook, it requires a rethink, it may change China's posture in terms of geopolitics, because through this recent round of crisis, they have not really been affected as some of the other larger economies have been. And so they've been able to make different choices. And that may change if we move out of deflation into inflation in China.
Alan, always good to chat to you. Thank you so much for coming on. Alan Siow, co-head of Emerging Market Corporate Debt at 91. Well, coming up, President Trump says he called off strikes on Iran after appeals from Gulf nations. We'll take a look at the role GCC countries are playing in diplomacy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in London. Qatar Foreign Ministry says President Trump's decision to call off strikes on Iran came as a response to communications from Gulf leaders aimed at ensuring diplomacy is given another opportunity. Joining us now is Sam Dahed, our senior Middle East reporter. Sam, I think many of us in the region were taken aback by that Truth Social post that President Trump put up. And he said specifically at the request of Saudi Arabia, Qatar and the UAE, he held back on imminent strikes against Iran. First of all, how much sway do these Gulf countries actually have in persuading the president? And second of all, people forget that the GCC isn't acting as a monolith group here. Each one of those countries has different prerogatives. So just walk us through the angle of the Gulf and how it may have swayed Trump here.
Absolutely. Good to be with you, Jumana, and your viewers. So basically, I mean, we know that President Trump has a strong personal relationship with all of the leaders of the Gulf, particularly the three main ones, the Emir of Qatar, Tamim, the Crown Prince of Saudi Arabia, Mohammed bin Salman, and the President of the UAE, Sheikh Mohammed bin Zayed. My knowledge through multiple sources that he actually speaks to them quite often on the phone, and since the start of the war, and including recently. So I wouldn't be surprised that they, spoke to him on the phone. Maybe they represented, I mean, again, I don't have all the details of the conversation, but they probably explained to him perhaps the consequences or of resuming the war, and how that would lead to escalation, and how they would be again left to bear the brunt of Iran's retaliation. Having said that, I think it's important to while Trump had put them all together, to understand that there are nuances and differences in their positions. For instance, take Saudi Arabia, I mean, the largest country here in the region. Yes, Saudi Arabia, I mean, a person close to the Saudi leadership told me, and I'm reading, "We highly value President Trump's decision to give diplomacy a chance." And this person told me that they support Pakistan's mediation. I mean, that's obvious. In fact, Pakistan was brought into all of this with the help of Saudi Arabia. And this person told me that Saudi Arabia's contacts with the U.S., the regional partners, and Iran, remember, so because the foreign minister of Saudi Arabia is having conversations with his counterpart, his Iranian counterparts. This person said these contacts are mainly to support the ongoing negotiations. On the other hand, another person close to the leadership said, yes, we don't want the war to resume. We want the war to end. We want no further escalation. But at the same time, Saudi Arabia supports the pressure that the U.S. is exerting on Iran through the blockade of Iranian ports, right? And they feel that's very important for Saudi Arabia. They can't allow Iran to have control over the Strait of Hormuz. And then we come to the UAE first. Oh, go ahead. Sorry.
Well, I was actually going to ask you specifically about the UAE, because you and our other colleague, Fiona MacDonald, reported about a week ago that UAE did actually participate in the war militarily. They struck Iran not once but twice throughout the course of military conflict. So, the fact that Trump referenced the UAE as one of the countries that's exerting diplomatic influence, how should we read that from the UAE perspective?
Absolutely. Good question. I mean, first of all, just very quickly, I mean, the UAE does support diplomacy. It's important to say that. The UAE does support escalation. But what the UAE doesn't support, and it's made that very clear, is a rush to make a deal with Iran at any cost that would leave Iran more emboldened, more dangerous. That the UAE is against, and has made it clear a number of times, particularly at a time when the UAE continues to come under attack from Iran, and I mean, potentially from Iran, this last strike, but we know this, the previous one, the previous strike last week was from Iran. But this week, we're being told that, I mean, this was a statement from the Ministry of Defense here, that they've intercepted they've tracked 6 UAVs. 3 of them originated from Iraq. 1 of them struck, an electrical generator in the perimeter of the nuclear plant, Al-Baraka. This was over the weekend. This is most likely the work, potentially, I mean, we don't have confirmation yet, of Iran's proxies in Iraq, one of the militias that report directly to the Islamic Revolutionary Guard Corps. So this is where the UAE stands. I mean, it continues to come under attack, and it's saying, yes, I want the war to end, but I don't want it to end in a way that leaves Iran more dangerous. I think that's really kind of the gist of the UAE position. In terms of the story, we reported last week, I mean, this was during the war when, after 10 days of being pummeled by Iran, the UAE, and you have to remember the UAE basically bore the brunt. 3,000 missiles and drones were fired at the UAE, during the 2 months of the war. And the UAE said to its Gulf partners, we have to come together. We have to deter Iran from doing this. And in the end, they said, that would be an escalation. That would be inserting ourselves into a war that they believe, they, meaning Saudi Arabia and Qatar, believe that Israel and the U.S., provoked and started.
Sam, great to have you with us. Thank you for bringing us the perspectives from the Gulf region. Sam Dahed, our senior Middle East reporter. Well, coming up, the WHO calls for coordinated global response to the Ebola outbreak in Congo and Uganda. That's next. This is Bloomberg. The World Health Organization is stepping up its response to the Ebola outbreak spreading across Congo and Uganda as officials race to find vaccines and treatments for the rare strain. WHO Director General said the outbreak underscores the need for a coordinated global response.
The outbreaks of Ebola and hantavirus in the past 2 weeks show why international threats need an international response. They show why the world needs the international health regulations and why it needs WHO.
Our Chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So just walk us through the latest. What is happening on the ground, Jen?
Yeah, Jumana, what we know right now is that there are more confirmed suspected cases and also deaths right now. Just about 500 suspected cases and just over 131 deaths linked to this Ebola strain in the DRC. What we just heard there from Director General Tedros just speaks to some of the concern for health agencies with this new strain just because it's so understudied. What we did learn on Tuesday, though, is that the CDC is working to move more people who are classified as higher risk to Germany, and potentially Czech Republic is also going to be added to one of those countries that will host some of these individuals. But again, what's really complicated health authorities is that this Bundibugyo strain is quite different from some of the other Ebola strains we've seen in the past years. Some of the symptoms early on sort of mimic what we've seen with malaria and flu, potentially why many of these cases could have gone underreported or unsuspected for so many weeks.
Yeah, and how are we seeing the international community respond, particularly from a financial perspective?
Yeah, what was interesting to hear from the Director General there is that he is calling for international coordinated response. We're seeing that really coming together and mobilizing, especially from the U.S., which I should point out, the U.S. did leave the WHO in early 2026. But on Tuesday, we did hear that the U.S. announced a funding commitment to accelerate, among other things, frontline care. They say that this will help fund up to 50 treatment clinics in the DRC and Uganda. And the U.S. reiterating that this shows their commitment to global health and humanitarian partners. Again, the U.S. did leave the WHO in 2026, but we did hear the WHO also saying that they are working to mobilize about $3.4 million from their emergency contingency fund. Africa's CDC also working to mobilize more funds, but quite critical to all of this is what we heard from Director General Tedros, and he's saying that this is showing just the financial strain that not just the organization is under, but really the financial pressures that a lot of health agencies are facing, given that over the past few years we have seen a declining of aid. So potentially this will affect the ultimate response, but we are seeing a bit of mobilization as far as this current outbreak is concerned.
Jen, thank you so much. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Well, we're going to round up the show with some football news. Arsenal Football Club has won the English Premier League title for the first time in 22 years. Thousands of fans celebrated in the streets of North London as Manchester City's challenge ended with a draw in their game at Bournemouth. Arsenal had finished runners-up in the past 3 seasons. They now face PSG in the final of the European Champions League on May the 30th for the chance to secure a rare double. And a look at equity markets as we head into the European Open. Things are dipping slightly. We've been keeping a close eye on rising bond yields, the impact that that's having on equity markets. S&P futures down 0.2%. European markets, take a look there. We are seen opening much lower, down 0.8%. And there, once again, keeping a close eye on the impact on oil, higher oil prices, geopolitical risks, rising yields, and of course, Nvidia earnings coming up later today. But I'm also going to round up the show with a little bit of housekeeping, just to let you know, for regular viewers of Horizons. This is actually my last Horizons show for now. I'm going to be back at the end of the year. In case you haven't noticed, there's a little girl kicking me in my stomach, so I'm going to be off. As of next week, I'll be broadcasting out of London for another week or so. But until I see you, you will be left in the very capable hands of the lovely Abir Abu Hamad. That is it for Horizons Middle East and Africa.